Hi traders, Nathan Bray here from ACY Securities. Well, I want to have a chat and take stock of where we're at in relation to gold. So towards the end of last year and into the start of this year, gold has very much been accumulating or tracking sideways. Now, yes, the overall trend is up, okay? The longer term monthly trend is up, and it has been accumulating above that psychological 2000 level now for well over 40 days. So all of these things are really positive technically for gold. The only issues that I'm seeing is now central banks are coming out with a mantra of we're going to keep interest rates higher for longer. Now, higher interest rates can be a headwind or can be bad for gold. The fact that we're not going to get these immediate rate cuts is going to be a problem, especially on the US dollar side. We can see right now the US dollar strength that is continuing, especially on the daily chart, higher tops and bottoms on this US dollar to start the year. That is also bad for gold, okay? So we're now seeing, after really explosive data coming out from the NFP for last month, the job creation is immense, but inflation isn't taking off again as yet. So the problem we've got for gold is inflation has actually eased. Look, it's not down at its target rate by any means, but it's certainly eased so that gold as a historical inflation hedge isn't really starting to move on the back. In fact, it's starting to weaken a little bit. You throw in the fact that the 10-year yield, okay, is parked itself pretty comfortably above this 4% level. So when I look at all of these areas, I can start to see headwinds for gold. And in fact, I'm looking at this 2075, 76 level of triple top that we saw and a false breakout as being a resistance level now for gold. And in fact, we're starting to see it put in some lower tops, especially on this daily chart. So all of these things are starting to show headwinds. Maybe this explosive move up in gold could be over for the short term. You throw in the fact that we're in a risk-on environment. People are looking for stocks, folks. They're buying stocks around the world, especially in the US, going through to all-time highs. What we need to see is a move back to a risk-off environment. That will be very good for gold. What we need to see is inflation start to build again or show it is not dropping any further. That would be very good for gold. And what we need to see is a big geopolitical fear or event to occur in the world to move markets from risk on to risk off. And we start to see some selling off in stocks, and we start to see these yields dropping as central banks come in and start buying bonds again, okay? They're the things I'm looking out for, because at the moment, I'm seeing weakness moving forward in gold. That's all from me, folks. Have yourself a fantastic week.